Hello, this is the price action for yesterday, the EURUSD 3-minute chart. We had a bull spike followed by an overshoot that led to a reversal and broad bear channel. Let's go up to the 15-minute chart to see how this formed. So on the 15-minute chart, the day prior, we've had this really strong downtrend. Will we get a second leg down? That's a pretty big high probability that we may get at least attempt at it. And we've gone into this trading range here. We've had one press, undershoot, two presses, undershoot, and then on this third attempt down, they've broken through and it's failed because the first attempt of a trading range usually fails, and they've all got trapped, and then we've spiked up, and we've overshot a smaller channel that you can't really see on the 15-minute time frame, and then we overshoot and we get this, we also fail to break out, but we're going to get two legs back here. So we failed on this channel, we get the two legs back. Now traders are looking to go long again because this phase is over. That fails, we then overshoot and we skyrocket out of there. So you have to make sure you get on your, once you see this lower high, you should definitely have your channel in there by that stage, and knowing that we're probably going to head down. And that gives you a lot of trading time in there. But let's take a look here. Okay, so a bit trickier. I'm going to dial down to the 1-minute chart on this session just to show you some things. So we have this spike and we get this bull gap here, and we overshoot this micro channel line, creates this trading range in here. Now, you may be looking to go long here on this bar, but the problem is that it fills the whole trading range here, and then it fails. So whenever that happens, if you do go long there, it's not a bad bar to go long there, but contextually it's not that great because it's at the top of a trading range, a mini trading range. And when it fails to break out, you have to exit, because if you're scalping and you've got your stop here, when it fails to break out, it's probably going to do, a measured move of the trading range. So you put that down there, and yeah, it goes all the way back pretty much to the tick, and it'll take out your stop. So it's a first entry short pullback, second entry short failure, and that's the better bar to go long on at that point. Now, it's very, very hard. Like, you're going to trade up to the trading range, take some profit, and hope that maybe you get a second leg up. But once you start overshooting this channel, but how do you even see this channel? This is the next step. So I recommend using the 1-minute chart for channels. I don't recommend trading off of it unless you're really, really good and you understand how it works. It's a lot more bars to see and comprehend. And Al Brooks says that too, like the 1-minute chart's just got too many things, too much going on, and it's hard to comprehend. This is on the 1-minute chart. We can see the highs and the lows of this channel, and we can see it forming. And we can see that it's overshooting here. It's overshooting, so we're expecting some sort of channel trading range to form. But the failure is not going to occur after 5 bars like we're used to with the 5-minute chart, 3-minute chart, 5, 6 bars. It's going to happen way later, and you're going to get confused. And this may just keep going up at this point. I can't time it. It's just my timing's off on the 1-minute chart. Well, the 3-minute chart, I know that if I'm looking at the 1-minute chart and I can draw in my channel, I can get my channel on there, and I can just confirm, yeah, there is a channel there. At least I know when it breaks out after those first 5 bars, I'm expecting if that fails, I'm going to get 2 legs back after the overshoot. And when that happens, when you sort of overshoot this line as well, and you start to see that trading range form, I then know that it's probably good to go short here. And we're also breaking out of a trading range in a really strong downtrend. So there's multiple things making this better to look for shorts than looking to go long at this point. So we're playing this smaller range now. So we've broken out, and then we've pulled back, and then we've done a breakout pullback there. So you can go short there. Yes, we are into this micro channel line, but we are far away from the EMA. And we are expecting 2 legs back. So that makes this a better trade, so we can take that trade down to the EMA. We overshoot this micro channel line, so keep drawing your micro channel lines on there. I use the 3-minute to draw my micro channel lines. I'm not drawing these on the 1-minute chart. I'm really only looking at the 1-minute chart to sort of get, am I in a channel? Trying to find the channel as quickly as possible is the goal. Where are the highs and lows? Anyway, so now we're expecting 2 legs back. So we get this 1 leg back down to here. We've overshot again. So we draw in our purple range again. We're looking for the range. And then we do the same thing. We go up. We try to break out of there, but we're also making a lower high. So we've had a lot of bearish bars, and we're expecting those 2 legs back. So the first attempt up is going to fail. There's our lower high. So you should be looking in there. Oh, it's trying to go up. It's probably going to fail. Once it fails, you can enter. Head on down for your second leg. And we get that second leg. Then we head on up here back again after the overshoot, because every time you're overshooting, it's getting vacuum tested back up, as Al Brooks would say. Like these overshoots, they cause trading ranges. So every time you're seeing an overshoot, people going short there, they're all getting screwed because it's just going to come back up and retest the high, usually, or at least the midpoint. So overshoots, that's why traders don't want to trade off of overshoots. They're very dangerous, micro ones and the bigger ones. And then we get the triple test there. I didn't mark it just because it's hard to, there's not much room there. So I decided not to mark it, but there is a trade there. There's a triple test there. But it does close sort of in the middle of the trading range. There is enough room, probably to the lows, but a little bit tougher trade. So we head on down. We hit the bottom of the channel line here, and we then head back up. And this is like the retest of this channel. So a channel is either going to create a new low or it's going to do a retest. So if this breaks out and then does a retest and it's got something this bullish, then yeah, you probably are going to head on up, but you're only going to head up to the high of this channel. And you've now got enough information that you should understand the highs are there, and you should be able to draw your channel line on there so you can exit for a scalp. And then we head on up, we overshoot again, and then we create our purple range because we've overshot. So you just start drawing it. You'll get really good at just getting that tiny range in there because that's what we're trading. If you've noticed, all the trades we're taking are all in little trading ranges. That's what we're looking for. So the overshoot lines, and this is also like you can see the full channel there, spike up, channel, overshoot, 2 legs. Dial down to the 1 minute if you can't see it fully correctly, but don't take those entries on the 1 minute chart. It's just hard to do unless you get really good at it, and then by all means do it. I don't want to say don't do it because it's just not true. People can trade the 1 minute chart, but yeah, I find it just too many bars. Anyway. So then we get this breakout pullback here. So we try to break out, we pull back, and you can go short there. We're at the top of a channel. We can ride it all the way down to the lows. So yeah, if you miss that one, you get the higher low here, a lower high here, and you're expecting that because you've had that leg down, lower high. So you should have your green channel on by now, and then you're trading down that smaller channel there. This is a real messy part here, and because they're all closing on their lows all in a row, just forget about this part. Even attempting it, once you see this, like up to this bar here, it's just a doji. The dojis on bigger time frames, and it's just hard to comprehend, but it still plays out the same way. It follows that channel line down. So channels are a real thing. When you start drawing them a lot, you'll start to trust them more. And they make good places to protect your stops, putting your stops above the channels and below the channels. So yeah, we've got all that there, and then it sort of gives a 2-legged pullback, and we end up testing the low of this channel. So you do get that 2-legged correction, first entry, then you get the first entry short pullback, you get the second triple test there. I should really probably start drawing those sort of lines on there, but you might go short on this one here, but it doesn't tick higher. You always want that. You don't you want it to go higher. You want it to tick back higher. Then you don't want matching highs there. So you get that tick back, you take that trade, you take it all the way down to the lows, or just scalp out. Yeah. Anyway, there's not much room. We're playing in small channel here. Yeah, I don't know why I mark this trade here. Maybe because we're on the third press. Yeah, I did not take that trade. I think that's quite hard to get in, so I'll remove that one there. Maybe I did see it here on this purple channel. So yeah, there is a trade there on this one. I probably marked it. I think I marked this after the fact. So you've got this purple range there. I just couldn't see it. And we've broken out, and it's like a failed breakout there, and we're right at the lows here of this little trading range. So we've overshot this micro channel line, draw a range in there, and then we've broken out. We've failed to break out. We're also hitting the bottom of a range, and we've got a bullish bar, probably going to head up to the other side of the channel. And this is also like a third touch, although you're not expecting it to break out, which it doesn't do. It traps everyone who's thinking this is going to break out here, because it's just such a weak touch. You need a real overshoot to cause some sort of reversal usually, or you need a break of a channel and a retest and up like that way, or two legs down after the break. There's a lot of ways it can reverse, but it won't usually reverse after a little touch like that. So everyone gets trapped there. You can't enter there. There's no entry there at all. Yeah, you might be able to enter on these when these bars are going lower, thinking we're going to go down to the other side of the channel, but this is always hard for me. When it just goes up and down for me, it's very hard to look for a trade. Although this trade you can see, this trade you can't see anything happening there. So it's just not safe for me. And you can't go short here because you do overshoot this micro channel line and you create this little range again. But how can you go short there? You cannot. You're right into this channel low. So anyway, it overshoots, and then everyone's chasing the overshoot. They may be looking for this to double bottom, like be an exact double bottom down to this side. But that does not happen. When you get overshoots, you're just drawing, again, you're just drawing the channel. The same thing that I'm doing here on these smaller versions of all these channels. If you look at what I do, I'm just doing the bigger version of it. So where the breakout area is the overshoot of this channel, I just draw my range down, and this is what you want to see for a reversal. Like, look at this, it just goes down and it just skyrockets over the EMA. Then if you wanted to, you could maybe think you're going to get a minor reversal there and put your stop wide and trade really small, and maybe you do get it, 30, 40, 50 pip move there. But that's much harder to do. But that's where reversals happen on overshoots, breaks of channels with retests, either high or low retest, low or low retest, two legs after a retest down. There's lots of ways it can reverse up. Double bottoming after the break and retest. Yeah. So, but people going long here thinking this is the third push and we're going to break out here and go for some sort of minor reversal, or even just break out of this channel and create a new low. That is a probability there. Like, we could just break out a little bit and then create the new low for the channel, but it just doesn't happen. It just completely fails there. But this is a longer talk. It is a Saturday. There's a lot more to go through, but I hope you get that. Use the 1 minute just for drawing your highs and lows and getting your channel on correctly, so you can understand when you're getting the overshoots. But I wouldn't be using it to trade off unless you really can learn how it works really well. But sticking, 3 minute to 5 minute, they're better trades, better charts for trading. It's less stress, and there's a lot of trades. There's a lot of opportunities. Anyway, that's it. Thank you. Daily Intraday Review is proudly brought to you by our Visual Trade Journal. It's software for price action traders. It's a visual trade journal, meaning you can drag and drop right on your chart, rate your outcomes, rate your predictions, all on the chart. It's different than anything that's out there. Come and check us out at intradayreview.com.